Hey everyone, ready for another deep dive? Today we're looking at this fascinating market report from November 22nd, 2024.
Oh, yeah. This one's a head scratcher for sure.
So get this, Dow Jones, record high, but tech stocks, not so much. Kind of taking a breather.
It is a pretty stark contrast.
So what's the story? What does it all mean for the market? Plus, we got to talk about some surprising winners like Gap. You see that?
Yeah, but that was a big one.
Trying to figure out what's driving investors right now.
Well, it's fascinating, isn't it? I mean, the Dow is soaring, right? Driven by sectors like industrials, retail.
Yeah, strong sectors.
But tech, which, often leads those rallies, it's lagging behind. S&P 500 and the NASDAQ, they did post gains.
Okay, so at least there's that.
But much, much smaller than the Dow's surge. So clearly different forces at play here.
Different forces, yeah. I mean, the report says overall market sentiment is pretty positive, right? They're pointing to optimism about potential policy changes, new administration, all that.
Right.
But let's dig into this tech cool-off a bit more. Like Nvidia.
Yeah, what about them?
Stock dropped over 3%.
Despite strong earnings.
Earlier in the week.
Yeah.
And they're not the only ones. We're seeing other mega caps, Alphabet, Amazon, Meta.
Underperforming, yeah.
What do you think's going on there?
Well, one possible explanation, and this is a big one, the concern over potential tighter export restrictions to China.
Yeah.
That could really impact these tech companies that rely on the Chinese market.
Right. Makes sense.
So, it's too early to say if this is some major trend reversal.
Right.
But definitely something to watch closely. Keep an eye on it.
So we've got political stuff, potentially, rippling through the tech sector. But now I want to shift gears. Talk about these cyclical stocks that the report highlighted.
Yeah.
What's the deal with them? Why are they doing so well?
So cyclical stocks, basically, they're companies that are super sensitive to economic cycles.
Oh, okay.
Like they do really well when the economy is expanding, consumer spending is strong, all that. So think, Caterpillar, Deere, automakers, steel manufacturer, all those kind of benefit from a strong economic environment.
Yeah, that tracks. And, I mean, their performance, it aligns with that positive economic outlook we were talking about, right? Investors putting their money where they see growth potential.
Exactly. And investor confidence plays a big role, too. When people feel good about the economy, they're more likely to invest in those cyclical sectors, expecting those companies to benefit from increased demand.
Okay. Now, let's talk retail. It's been a bit of a mixed bag. Gap had a crazy good performance, right? Beat earnings. Stock surged almost 13%. Ross Stores did well, too, even with, I guess, a cautious outlook for Q4. But then we have Target, and it wasn't great.
Yeah, kind of a mixed bag, like you said.
So what's your take? Is this a sign of, like, a broader trend in how consumers are behaving?
That's a really good question. It seems like consumers are being picky, right? Gap's success, maybe that means people are willing to spend, but they want value. They want quality.
Yeah.
Target struggles, maybe some hesitation there.
Yeah, I could see that.
Especially with, non-essential items. So it raises a big question. Is consumer confidence shifting? What does this mean for holiday shopping?
Interesting. Even with a positive economic outlook overall, still some uncertainty, huh? Okay, I want to talk about this investor rotation thing.
Oh, yeah. That's a big one.
What does that even mean, and why should we care?
Okay, so investor rotation, it's basically a shift in strategy. Investors move away from one asset class or sector and move into another. And what we're seeing now is a move away from those mega cap stocks.
The big guys.
The giants, right. The ones that have dominated for so long. And they're moving towards smaller, more cyclical companies.
So instead of putting all their eggs in one basket with those big names, they're looking for opportunities in companies that are more tied to the current economic cycle.
Exactly. It could be a sign that investors are anticipating a shift in market leadership, and they want to get ahead of it, capitalize on potential growth in these other sectors.
Oh, that's interesting.
And you know what? The difference between the S&P 500 and the S&P 500 equal weight index, it's evidence of this.
Oh, okay.
But the question is, will it continue? What does it mean for the future of the market? Yeah, that rotation out of mega caps, definitely something to watch.
Definitely. Okay, let's shift gears a bit. Talk about interest rates, always on investors' minds,
right?
The report mentioned a little dip in the 10-year Treasury yield, but yields surged last week. What's that about? Is this dip like a sign of things stabilizing, or is it just temporary?
It really shows the uncertainty around interest rates, right? The market is trying to figure out what the Fed's going to do. You see, interest rates, they have a ripple effect, right? The whole economy.
Of course.
Borrowing costs, businesses, consumers, mortgage rates, stock valuations, all of it.
So should we read into this dip, or are we getting ahead of ourselves?
It's not about getting ahead, it's about understanding the impact.
Sure.
If the Fed raises rates, borrowing gets more expensive. Could slow down the economy. But if they cut rates, could stimulate things, borrowing investment, but could also lead to inflation.
Right. Okay, the report also mentioned some upcoming economic data releases, especially the October PCE prices report.
Yeah, big one.
I hear that's a biggie for the Fed when they're deciding on interest rates.
Big one for sure.
Can you break that down for us? Why is it so important?
Sure. So the PCE, or Personal Consumption Expenditures Price Index, it's a key measure of inflation. And the Fed watches it super closely, gives them a real good look at consumer spending patterns, price trends,
Gotcha.
essential for understanding the economy.
So how does this PCE report actually influence the Fed? What do they do with that information?
Well, if the report shows inflation is rising faster than their target, they might raise interest rates to cool things down.
Makes sense.
But if inflation is low, they might lower rates to boost the economy.
Interesting. The report mentioned that the market's expecting a potential rate cut in December. What are your thoughts on that? Is that likely?
We got to remember, market expectations, they're just expectations.
Not set in stone.
Yeah. A rate cut is possible, but it's not a sure thing. The Fed's going to look at a lot of factors, not just the PCE.
Yeah.
Employment numbers, economic growth projections, what's happening globally, all of that.
So we've got to stay tuned, pay attention to all these reports. Each one could tell us something about what the Fed's thinking and where the economy is headed.
Exactly. That's what makes the market so interesting, isn't it? This whole web of interconnected factors constantly shaping the financial landscape.
Makes you think.
We're always looking for those signals, trying to figure out what they mean for the future,
It definitely keeps things interesting, for sure. But before we go, got to touch on something you mentioned earlier, this investor rotation thing. What could that shift away from mega caps? What could that mean for the average investor? Someone just trying to figure out their strategy.
That's a really good question. And I think, honestly, it's something every investor should be considering right now. This rotation, it tells us that diversification, it's more important than ever. So instead of, putting all your eggs in one basket with just a few big companies, it might be smart to consider a wider range of sectors and companies. Look for those opportunities in areas that could benefit from economic growth, like those cyclical stocks we were talking about.
So spread the love. Don't put all your eggs in one basket. Stay informed. Good takeaways.
Absolutely. Knowledge is power, especially with investing. By staying informed, diversifying that portfolio, understanding what drives the market, you can make better decisions and hopefully lower your risk.
Okay, so let's do a quick recap. What we learned today, Dow hit a record high, right?
Big day for the Dow.
Fueled by that optimism about the economy and the strong performance in those cyclical sectors. But then we have tech kind of showing some weakness. Interest rates are still a bit of a question mark. And of course, we got this whole investor rotation happening. What does it all mean for the average investor? Should we be worried?
Well, I think what it tells us is that the market, it's always evolving. We might be seeing a shift in leadership with investors looking beyond those big names and exploring some new opportunities.
So it's not just about following the crowd. It's about understanding what's really going on and making decisions based on your own goals and your own risk tolerance.
Exactly. Recognizing that diversification is key, staying updated on economic trends, policy changes, and being flexible enough to handle those inevitable market swings.
You've given us a lot to think about today. Any final thoughts for our listeners before we wrap up as they're navigating this crazy financial world?
Don't just react to the headlines. Really dig in. Understand what's driving those market moves and use that knowledge to make informed decisions that align with your goals.
Great advice. So with all that in mind, how do you see the market performing in the coming months? Will the Dow keep climbing? Or is a correction coming? And what about the Fed? What role will they play?
Those are the million-dollar questions. And if I had a crystal ball, I'd be on a beach somewhere.
Right.
But what I can say is the market, it reflects what we think about the future.
Yeah.
Right now, there's a sense of cautious optimism, but there are also some potential headwinds to consider.
So sailing in uncharted waters a bit, but with a little knowledge and a diversified portfolio, hopefully we can navigate it.
I think that's a great way to put it. By staying informed, being flexible, and keeping that long-term perspective, you can weather the storms and reach those financial goals.
Well said. We hope this deep dive has given you some valuable insights and something to think about as you navigate the world of finance. Thanks for joining us.